Hi, everyone. Patrick, Bhavana, Bran, all my trading warrior brothers and sisters. How's everyone doing today? And Ryan, how are you?
I'm all good, mate. How are you?
Quite a day. I got Powelled yesterday.
Did you?
Let's see.
You got Powelled.
I got Powelled. Yeah. So here we are in the S&Ps, right there on challenging that trend line from all-time highs. So I thought eventually we would take it out. I just was looking for one good break before it happened, but I'm not sure if we could probably get a breakout today on a decent PCE. And wow, what about the end, Brian? Brian, so my yield scenario got Powelled too. So when the 10-year broke like this, and you know what, I have to tip my hat to Stell. I think he was the only one yesterday that thought that there could be a dovish surprise, and he's someone.
No, that wasn't me.
That wasn't you.
No, it was
that
Kman.
Kman?
Kman, yeah, I got it wrong.
Kman, well, okay, Kman, you get my hat.
Hi. Oh, thank you very much. Good morning, Dale. I so much appreciate it.
You want?
It's like what kind of hat is it?
It's a straw hat.
Exactly. Those are the ones we want. I like.
Don't sit on it. You'll ruin it if you sit on it. So anyway, huge day. I don't know if this Sigma event is as big as it was. What was that last real huge one that we had? It was on an inflation. Oh, here we go. It was this candle.
CPI, wasn't it?
Yeah. So I don't think it was as big of an event, but it was a big event.
Early days yet. Early days.
Yeah. So what do you think? What do you think here, guys? EG getting to a level. I see some alarms set right around here, and I don't know. Why is all the money flow going to the UK? Why is EG heading down? Can someone explain that to me?
I don't think there's anything special going on. Really, it's probably just the usual, steeper volatility in the pound than there is in the euro. Gets things stretching a bit further. Cable rises more than euro dollar, goes down more than euro dollar. I've got no fundamental bias on euro sterling still at the moment. There's no real driver either way, in my opinion. It's just trade between the levels. We went all the way up to 90. We've come all the way back down again. We went back up to 88, come all the way back down again. It's just trade the levels. Watch the ranges.
Okay, Dixie pressing the lows here.
Hey guys.
What do you guys think? I mean, this blue line is, I don't think I'm the only one that has it here. Goes back to the COVID high, and you look left, it's everywhere, and a lot of the long-term dollar bulls are saying for them. That's it. See here.
That's probably your 105 in euro dollar, isn't it?
Yeah, I think I have the line up there. Yeah. So this is like a demarcation line for the end of the dollar bull market, according to a lot of people. So just what do you
I think we should, sorry to interrupt. I think we should take a step back and look at what Powell told us yesterday. And Powell basically told us that the rate of change of rate hikes is going to change. Well, that was more or less anticipated, right? We were pricing 50 basis points for December coming up. Yeah. And this is basically what he told us. So
why the reaction?
I said on the Flow Show, I don't understand why this bigger reaction, given that Powell told us what the market was already pricing. Maybe it was a case of a lot of people expecting Powell to be on the hawkish side, like he had been for months and months, like
he
myself
finally
included.
Convinced me still. I mean, after all this time, I said, okay, he doesn't like a strong stock market. He should come out hawkish again today.
Well, yes, and if you think about what the other Fed members have been telling us, except Brainard, it's been the same. It's been, we're going to fight inflation. We'd rather over tighten than under tighten. All this stuff led
That's not
me.
what he said yesterday. Yeah,
It's not what he said yesterday. Yeah. So,
yeah.
but overall, he told us pretty much what the market was pricing and kind of expecting. But I do think that maybe there was a lot of positioning or a lot of people thinking that he was going to surprise to the hawkish side, myself included. So Kman got it exactly right. I mean, the market reaction, because Kay did say yesterday, even if he doesn't give us anything new, and if he's not, obviously if he's not hawkish, but even if he's not overly dovish, he said, I think the market's going to like it and it's going to rally. And this is exactly what it did. So, kudos to Kman. And but the question is, what do we do now? Because we are pricing a 50 for next meeting, and then the peak is priced in at just under 5%. So basically this 50 and another 50 and we're done. Do we think this is going to be the case? This is a question. So it's a tough one. It's not an easy one, and definitely Powell has kind of gone with the market and told us that they're going to hike less than before. So a 50 is done. Is he preparing the ground for 25s and the stop? Could be. But from what I heard yesterday, I didn't hear something groundbreaking. He definitely didn't come out dovish. Maybe he wasn't hawkish. He was neutral. But anyway, the market does what the market does. And you pointed out very correctly that we are getting to a level now in the S&P, which is critical. Somewhere between 4070 and 4100, I think, is the or 4080 and 4100 basically. So we're getting there now. The euro dollar is also getting very close to big levels. The cable is at big levels. Cable is on strong resistance here well, actually, it's just passing over this resistance, but it's trading around here. So it seems to be, if you want to be long dollars, it's not a terrible place to be shorting. Obviously, you know where your risk is. You know where the level is. We have previous highs from July or August, which are at 122.7, if I'm not mistaken, with 122.8. So you know where you're wrong. And the question is, what happens now? We've gone ahead and rallied, and oh yes, this is the end of rates. We're gonna peak. Inflation is going down. Everything's perfect. What happens now? Yeah. Do we keep going? That's a question.
Well, maybe we'll see.
You buy dips in stocks. That's it.
Okay. Yeah, could be.
The market's got what it's wanted. The market got what it wanted.
It has.
I was expecting I was expecting Powell to be more forceful. He wasn't. I said that was, we talked about it on the flow show a week. The biggest risk going in is that Powell isn't as hawkish as the market would want, and they reacted accordingly. Now, I don't even think the data so much matters. If we get higher PCE, decent NFP, I think those rallies in dollar, yields moving, they're all going to get faded because the market knows 50 pips coming. It knows what it's getting at the FOMC. It's going to likely get 50 pips and the ceiling moving higher. And how much higher can they go when everyone's seeing the data crumbling?
Well, that's how you get a melt up. That's how you get a melt up in S&Ps, right?
Yeah. And also, let's not forget, the data has turned and it's continuing to be bad, and they can see it. PMI, Chicago PMI, massive miss yesterday. ADP, missed. We obviously wait to see what happens with payrolls tomorrow. But inflation is already ticking down a little bit, not a lot, but it's ticking down a little bit. So it looks like things are turning. The question is, the Fed have told us that they know there's a lag between monetary policy and things happening in the economy. And by the way, housing is also terrible. So when do they actually, pull the plug and say, yes, this is it? We're done. That's what the whole market's trying to gauge. That's the thing. And I think we got a good indication of this yesterday, but I'm not 100% convinced that, the peak in rates that markets are pricing, I'm not convinced it's there. I think it might be a little bit higher, but the market's the market.
Wanted to show the GDX. I had this neckline here for a long time that I couldn't get through, basically 22 to 26. Target's 30. We're almost there. It'll probably get there today. And, we're not confirming. And a lot of that's happening as strong as silver was yesterday. The shares really didn't do that much. Here's there. So we're probably going to make a run at new highs, but this was the strongest one I owned. And if I ask myself sometimes when I'm long, would I do it? Would I buy more here? And the answer is no. I wouldn't buy more here. We're getting more divergence here. We'll see. I mean, the metals look great. I can't find a technical argument about it. And what happened was, you learn sometimes you get married to a scenario on a formation. And I thought the gold silver ratio was going to break out here. It backed off, but here we are now heading back towards support under this low at 78. So just something to, bring a little balance into people that are peeled to the ceiling after yesterday's tremendous move in metals.
A daily close above 22.14 silver, and I'm getting in. I'm getting in more.
22.14?
Yeah, 40.
Oh, 40. Okay.
Yeah, it's a trend line. It was also there's a trend line there.
Grab the screen. Let's see it.
Hold on a second.
I know there's a lot of silver traders in here.
Yeah, yep. Hold on.
And good morning, by the way. And I just want to let you know, Dale, Grega is here too.
All right, the wizard.
We're saturated.
Yeah, I'm just I'm listening. I'm wondering if Stelios will firstly wait on non-farm payrolls report tomorrow, or will you act further? If maybe...
I will wait for that. But it kind of I will wait. But look, this
sounds like Grega's looking for a pullback.
Yeah, I see maybe some slightly more room for further weakness on the US dollar, but more importantly, the S&P 500 is at the trend line and a fifth wave.
Yeah.
We've been talking with Blake last time that it was consolidating. So I think that there is perfect time for a pullback. It's start of new month, so there can be some new position adjustments as well. So I think that, yes, we should see some kind of a pullback for better entries, in my opinion.
Are you taking profits on Aussie up here, Greg? It looks like, it's not the leadership today.
Yeah, I made the tighter stops after this breakout. I still will give it a chance for further rise because US dollar index is still consolidating above that support that Blake also showed. It's at 200 moving average, if I'm not wrong.
Yes, it is. Yeah,
it's at the 200-day.
Yeah, I think that fifth wave is still missing here. So your blue line at 104,
you have it a little higher.
There,
yeah.
Before higher. Yeah. So I think that when we get this breakdown, the other very strong currencies such as Aussie could extend higher, and pound as well.
Could I ask you something about euro? If you put up daily, Stel?
Yep.
Just something I've been looking at. You see the last two highs that we had around, what was it, 105-ish?
Yep.
I was thinking that one more thrust, it could be setting up for a sale. What are your upside targets in euro here, Grega?
106.
Okay, so that would be a lot higher for a third drive. Okay.
Yeah, same thing. It's a fifth wave coming. You can clearly see that that's a consolidation. So in my opinion, but it's still bullish. You had a much better trades maybe on commodity currencies rather than euro.
Yeah.
But CAT is waking up. I mean, Loonie could be quite attractive. I also shared in our chat room. I will be next week looking most likely for a dollar CAT for further weakness. We had some very nice stop right there at the 61.8% we had with the three waves up. And more importantly, crude oil has seen a very nice response higher. I think that it has room for further upside. So dollar CAT, in my opinion, it's a very nice potential play on the downside. But again, I want to see if the price action remains as it is in the favor of the CAT after tomorrow's data, obviously, US and Canada.
Okay. Bitcoin?
I mean,
why are you laughing, man?
I mean, as I said last time, and we also discussed with Stelios in the chat room. I mean, sentiment is definitely at extremes. You know, it's pessimism. Yeah. So we know that markets moves in cycles. So from that kind of a perspective, I think that in 2023, we could be trading higher than the current levels. But in the short term, I mean, I'm not really convinced that that's the bottom yet.
Okay.
But on a longer run, I think that we will see some quite nice recovery here.
Yeah. Do you think that'll be with the weaker dollar as being part of it?
Yeah. I mean, but I'm surprised yesterday. Not sure if who is tracking cryptos, but we have seen a massive move up on stocks, on those Aussie everything, but cryptos did not follow to the upside. So I think I'm just afraid that maybe interest in cryptos is not there right now after the recent events.
Well, it has been shaken, that's for sure. Yeah.
Did you guys see the interview of that guy? He was interviewed on CNBC.
No, he didn't mean to commit fraud, right?
I would never. How can anybody want to watch that? I mean, seriously, that's like horrible.
They're trying
I had to see how, what kind of personality was able to bilk so many people.
He's a sociopath. I mean,
I don't get how they're trying to make it look like he was a victim somehow. Anyway,
I mean come on. Why isn't he in cuffs like Madoff was?
I don't know.
I don't know.
But
I don't know. But I want to say good morning, everybody.
And
hey, I was actually just adjusting some of the key levels on ForexAnalytix. These numbers that you see here are all manual. So we go through and the team goes through and puts them up there. And I was helping out and kind of adjusting some of the support and resistance levels in our platform. But what I wanted to point out, I was just looking at the Euro Kiwi. I mean, this thing, the Kiwi is just out of control strong, if you guys haven't noticed. And one of the developments yesterday that we had was we were attacking like this support from a couple of days ago. And here, I'll show you. So if you're in the chat room and you go over to our files, right? So you can go through and, just go through and, see all the charts that people upload, and you can go back for days and days and days. Anyway, the original Euro Sterling, and I'll show it to you right here because you'd have to go over to the original message. Talked about yesterday, if the market did rally, the Euro Sterling was at risk because, and I'm trying to pull up the chart here. Let me see if I can find it for you. Oh, well, here's like the secondary chart as we start to break down. And I'm like, hey, if we see a rally and risk, and I even pointed out Kman, well, because Kman's in the chat room, we talk all the time there. I said, if Kman's right and the market does rally, the Euro New Zealand is at risk of testing the 200-day moving average. So this is the move yesterday, as we broke through that trend line, and it's continuing today. But it's not just the Euro New Zealand. You got to look at like the Aussie Kiwi too. This broke some really major support. The price action has been very bearish, the Euro Aussie, the last 2 weeks. I bought it, by the way, within the last 2 weeks, because I bought it on a test of the 618 retracement. This is a big monthly, level, or weekly level rather. But you can see how it just kind of played into a very bearish, consolidation. When you get a sell-off and you don't get a reversal, that's just, asking for trouble, right? You just have this bearish wedge that's developing, and, eventually we broke down. Those are just like some of the things that got my attention overnight. I'm not like a lot of you Europeans that have been in front of your computer for like the last 8 to 10 hours. I get up in the morning, like Dale and I, we're North American traders. We come get in front of our computer. We start looking at all the charts and everything that's been moving. And those are just like some really key developments that happen in European trade. I wish I was awake for those moves, but some really big moves in those Euro crosses. Now, I want to ask you guys, here's the S&P. And, we're up at that 200-day moving average, major resistance. And I made a point of talking about this yesterday on the Trade-Off Show, which is the show that I do with Chris Weston. I did a poll on Twitter. And by the way, the poll is still there. If you guys haven't voted. it's there's 600 some votes, right? And you can't see it until you vote. Anyway, I did that poll specifically because I've been, all my Twitter followers are all, retail traders, and I've been tweeting for, I don't know, 12, 13 years or something. And so I usually just kind of tweet and move along with my day. But I have a lot of retail people that follow, my work. And so I know when I get respondents, I know it's a good, solid, gauge of sentiment. Because somebody, tweeted at me and said, "Oh, this is useless." I'm like, well, it might be useless to you, but it's not to people that actually pay attention to sentiment, because everybody's leaning bearish. And the market was leaning bearish going into yesterday's move. That was one of the reasons why I actually closed all my positions going into the Jay Powell speech, and I didn't feel very confident. It's because I knew everybody is like kind of leaning into it, and I knew we're up against the 200-day moving average. However, and then you have people like our teammates like Stelios, Ryan, Kman, that are warning, hey, maybe Powell might be a little bit more, might change your tune a little bit. It's like you put all that together, and that really, some warning signs. Now, here's where it becomes tricky, because we are right up against resistance, and we're up against the channel resistance. It's really just, captivated this market all of 2022. What do you guys think here? Dale, what do you think? Do you think the market's going to break higher here?
I might have left it still. No, I'm here.
Okay, you are. Okay.
Yeah, I think it's going to take out that trend line.
You do? Okay. Yeah, why is that? I'm just curious, other than maybe technicals.
Just a change in I think the market's going to hang on to what Paul said until at least, mid-month, to see what happens with the Fed meeting. That gives it's like a 2-week window. I'm trying to think of anything that could be bearish. Dollar's weak. It has everything going for it now.
Yeah, and I'm wondering if the dollar index is really going to break down. I know we are actually seeing some dollar weakness as we come in. There's a lot of follow through. A lot of orders that are coming through this morning, especially this morning in New York trading. You've got a lot of people are like, "Oh, did you get the memo on Powell? Powell's really dovish. Oh, let's put more money into our 401ks. Let's go ahead and pile into the markets this morning." It's going to be really interesting to see if we can get follow through this afternoon. There
are a lot of people really looking for once we break out, though, Blake. There are a lot of people that have counts that fulfill at 4,300. So, a lot of people will be saying, well, we have a breakout of a downtrend, but there are pattern people that have been talking 4,400 since the fall.
Yeah.
So, not new highs, and then fail from there, take out the lows into the spring towards, that 3,000 level, 29.
It's going to be interesting to watch to see if we can get follow through today, because we have a lot of we call it,
this is the toughest trading.
Fear of missing out of the rally, right? And you got to chase performance here. And this is something that we've discussed a lot for the last several weeks. And why it's been very difficult for the market to be short is because you have asset managers. When you look at an index, you look at the S&P and you're like, okay, the S&P is down. Where are we at from our highs? The S&P is down 15% from the highs, and for the year, yet you're a fund, your institutional account, blah, 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 you're down 20%. You got to play some catch up, man. Because if you don't, you are screwed next year. Anyway, I think it's a really very key level. Ryan, what do you think? Do you think we're gonna break out here?
I think it's possible. I think I voted for the other side.
Oh, you did. So you voted for more of the bearish, like we're going to close below 4,100. Look, or 4,000. Excuse me. That's interesting. Why do you feel that way?
Well, I don't know. After Powell, I think we're more likely to hit 42s before the year end than. Maybe.
Okay. So you think that your opinion is it has changed, and because of yesterday, that's changed your mind. That's interesting to.
Well, it's twofold. I mean, I thought my expectation for Powell that he'd be a bit more forceful on the hawkish side. But remember my positioning. I've been short dollars for a while now, and positioning for exactly what happened yesterday for the longer term. I was going to use a potentially hawkish Powell to sell more dollar yen. But you've got to take what happens at each event, and he wasn't as hawkish. He's given the doves or the bears in the market what they wanted. It's pretty much a confirmation. Okay, we haven't heard from Powell since the FOMC. We haven't heard from Powell since the CPI report. So the market was already doing this move. All it got yesterday, in my opinion, was confirmation. There was a risk from Powell that he was hawkish. He wasn't. The market went, thank you very much. We'll continue as we were after the CPI. We'll send yields lower and we'll send the dollar lower. And that's going to continue. And today, I think you've got to sell dollar rallies and potentially buy dips in the stocks.
All right. Well, and I wanted to ask you really quick. Yesterday, you didn't seem so sure about Powell's comments that they were hawkish or they were dovish enough. Did you feel after like sitting on it a little bit that he was dovish enough? Okay,
I've got a different definition of dovish to the rest of the market. Dovish is when central bankers are talking about cutting rates. Going from 75 hike to 50 hike isn't dovish, it's just less hawkish.
Right.
Yeah, his comments were pretty much, give or take, an echo of the FOMC. There was nothing extra in it, no embellishment on it. After the FOMC, I thought he was potentially pushing the boat a bit too far out with his comments on the higher ceiling. From here, how hawkish can he get when the data's turning lower? They've got their ceiling in place. The market's saying you can tell us rates are going at 8%. Doesn't matter. We're seeing PMIs coming in soft. We're seeing Challenger grey layoffs coming in larger. We're seeing the negative data. Doesn't matter what you tell us on the hawkish side. The data's telling us something else.
Yeah, did yields stay inverted after that move yesterday? Did they invert more, or did they come in a little bit?
They did the what? Sorry.
Do we still the inversion?
The yield
did it get
curve
worse?
Inversion.
Yield curve. Did it get worse or stay the same?
It's about stable. Just perhaps a small tad deeper, but more or less the same. The inversion between the 210, for instance.
So look at, and by the way, speaking of the tens, do you see how big of resistance we're at? I mean, this is like this is huge, right? I mean, huge.
355, 360, where we're just at now. 358 on the tens. This is big support.
Yeah, that was a prior high 3.5. I remember by memory.
Yeah. So
2 minutes of data, by the way.
Oh, okay. And by the way, the dollar rand is absolutely blowing up today. And Kman, I was going to ask you about how you felt about the markets and all this other stuff, but we just got.
I mean, there's some impeachment risk for Ramaphosa because he stole money from a farm, and dollar rand is trading 5% higher. I'm not going to touch it.
Wait a second. He's a politician that's corrupt?
Well, you don't call him that way over there, right?
Oh, so
he's like Powell. He wasn't hawkish or dovish. He was mellow. I call it mellow.
All right. Anyway, that's crazy because we were talking about this literally 2% ago in the chat room when it was trading at 1752. I mean, it is just racing higher. That is it. You guys got to be really careful around this thing.
Oh, wow.
If you've ever traded the rand, 2% against you is a really big move. So and again, we've been chatting about this in the chat room for the last hour and a half or so, and it's just blowing up. Okay, guys, we have as you pointed out, we've got data coming out in just about a minute here. I'm going to take that off the screen. I'm going to put on the dollar yen. We're going to go ahead and put this on multiple charts. So we have the dollar yen, gold, S&P. Let me run over to ForexAnalytix. Let me grab the data flash, which comes included with your ForexAnalytix subscription, so we can see the data as it's being released.
So
then
cool.
Put live squawk over here, so you have the live squawk news feed right there. Let's go over to the charts.
You have everything right here.
Here we go. There you go. All right. There's the PCE. Why is the PCE so big, Stelios?
Paul likes it.
I don't know.
Okay. Well,
They like
Paul,
it.
Paul
they
likes
like it. They. Who are they? They, them. All right, let's see it.
He was not. He was nice yesterday.
Canadian
He
numbers
wasn't mean.
stronger.
Initial jobless claims
Jobless claims a little
better.
bit better, but the revisions a little bit lower, a little bit worse. Sorry.
Whoa, the S&P is pulling back a little bit here. Did you guys see the PCE? Am
I don't
missing
see it. No, I don't see
It
it.
came in TBA.
They're still making it up. Oh, here we go.
0.2 month on month. Okay, in
it
line.
was worse
in
than
line.
expected. Okay, stocks are going to like that.
Exactly what Powell said. He said their models were saying 6 and 5, and it comes out 6 and 5. So
Yeah, I mean, hey,
Leak,
you know, it's
leak.
liking
tomorrow,
it. So
his line is 100K. So watch the 100K mark.
dollar index is below the 200-day moving average. Just FYI, we are well below it, and we're actually below previous support too. So just keep that in mind. But you know what? The euro has failed, is not getting above 105 yet. So that's it's interesting how the euro is really struggling up here. That's, I would be thinking about that as you move along. It's especially in the dollar. You know, I'm always more confident when I have dollars moving in unison, and right now that's just not the case. And the euro's, you know, one of those key components of that. Hey, if you guys want to learn how to be part of the ForexAnalytix community, you can always, you know, take a trial. It's $1 for 10 days. Download the mobile app. While you do that, we have a mobile app that's free to, you know, it's included rather with the subscription. And you can also join the trader funding program, learn how to trade our money. You don't take any of the risk. You just have to pass an assessment. We have made some nice paydays and authorized some nice paydays this last month. So it's really, really good for traders, especially if you don't have access to larger amounts of capital. So make sure you check it out. You do have to take an assessment, but when you do that, you're also included in the ForexAnalytix community for a period of time. So you have a bunch of ideas. You can be in our chat room. You can talk to us about what we're doing, and you can even jump in the World Cup conversation, which is a very lively conversation the last few days. So last couple of weeks, rather. All right, guys. I want to say thank you all for joining us today. I'm sorry?
Don't forget to tell everyone that the non-farm payrolls competition is open, and 3 lucky winners will win a free month if they get closest to the number tomorrow. I've put the link in the chat there.
Yes.
Just hit the tweet and get your guesses going. I haven't seen your guess yet, Blake. And we
no,
always
I need to jump in there, but Stelios is giving away free months. I mean, Stelios is like Oprah. You get a car,
and you get a car.
You get a car. You get a free month. You get a free month.
He's a generous guy.
What's that?
He's a generous guy.
He is like the most generous dude on the face of the planet. Is Stelios Kontagula. So anyway, make sure you guys. I'll go make a guess right now. Actually, I'm gonna jump in there right now.
All right, guys. Thank you, team.
Thanks, everybody.
Nice call came in on good trader intuition.
Thanks for the hat.
Okay, buddy. Remember, don't sit on it. All right. So thank you, team. Andrew O'Connell, welcome back to F.A.C.E. How are you?
Thanks for having me back, Dale.
Good to have you, Andrew. So lots happened here in the last 48 hours. Are you going to share your screen with us and talk about what's top of mind for you after Powell and the PCE today?
Definitely. Let's go ahead and share the screen. Yeah, pretty crazy that we just got that PCE data. Let's take a look here. Yeah, so I'm going to go ahead and share. Yeah, so I'm taking a look at the PCE data. And this is definitely, you know, of course, this is market moving stuff right here. As I look at this, you know, I know you guys were just mentioning this downward trend line that we're facing on the indices. Let me know if you can see my screen.
Got it. In fact, the whole universe, I was saying a few weeks ago, the whole universe is watching this trend line because it's an easy one to see. You just take the all-time high, and looks like we're on the verge of breaking out.
Yeah, so we're pretty much trading right up to it. As I look at the PCE data, let's pull this up. I love this website, Trading Economics. So the data point came out in line, and I see here prices for goods decreased, but we had services that actually increased by 0.6%.
Yeah.
And if we strip out the food and energy, the PCE actually increased by 0.5%. So to be honest, as I look at this data point, I'm taking a look at the S&P 500. This thing has rallied about 17% off the lows that we had
October.
a couple months ago.
Yeah.
And I think the risk reward is just getting a lot worse up here, to be honest.
Okay.
So as we look
What do you
here,
think could derail it if it's not going to be yields? Is it going to be that finally that rates could come down and that we start getting earnings compression next year? We start getting some bad earnings or bad numbers, and the market sells off because of economic weakness, and the dollar could still work lower, and yields could still work lower, and the stock market could work lower. Could that happen?
So I think the major problem this year, right, it's been the dollar index is moving much higher, and we see the dollar index over the past couple of months, it's come off these highs really nicely. And we've been tracking this for quite a while as the dollar index started in this topping pattern. Right. So we are certainly getting what we wanted to see there. And I think it's great to see the dollar index continuing to break down. The inflation data as well. If you look at the inflation data, it has gotten a bit better over the last month. We got one good series of inflation prints. This PCE data is the last one. We have the CPI, the PPI, now the PCE. But I just think in markets, a lot of it is what kind of news are you getting? And then also, how is the market reacting to that news? So in terms of like this particular inflation report, I would certainly say the market has already priced this in. This is October data, and we had the huge move lower in the dollar index. We also have this huge move lower in the VIX.
Yeah.
And take a look here.
We should come in at 20. Yeah.
Yeah. As I look at this situation, the risk reward, if you're getting long anywhere up here, is fantastic. But now at this point, for anyone that's sitting on the sidelines, if you're getting long, look at this red line. This was the last trough in the VIX. Yeah. It happened right around this 20 level. So I just think, the news is getting better. I was getting pretty aggressively long the market into the end of the fall. I think that was really just a fantastic entry point into the market.
So are you raising cash now, Andrew?
Yeah. So I've been raising cash the past few trading sessions. I was pretty heavily exposed to these Chinese stocks.
Wow.
Like if you take a look at
that Alibaba. Takes a lot of intestinal fortitude.
Yeah, for sure, man. Yeah,
not intestinal.
Yeah, it definitely
intesticle.
Does. Yeah, because these
in other
stocks,
words, you have big ones to be buying Chinese. So so that's interesting that you like China. Are you staying with those?
No, so I actually scaled out of these the past couple of trading sessions, and the only reason why is, for my trading strategy in particular, there's market commentary, and then there's actually trading the market. And for me, for my strategy, I am always looking to take 1 unit of risk and start taking targets when I've hit 2 times my risk budget. And then if I hit 3 times my risk budget, that's even better. If it gets beyond that, even better. And so like, for example, with Alibaba, so I missed this initial blast higher. Yeah. And I was like, okay, this theme is really taking off. Perhaps the Chinese economy is trough. This seems like a group I want to be a part of, but I missed that initial blast. And I never like to enter these things when they're incredibly extended. Yeah. So I waited for this pullback, and I got long Alibaba as well as PDD on this pullback to support. But to be honest, I set maybe like a 4% stop loss. And with the move these have put in over the past couple days, this thing hit my 2 times risk budget, hit my 3R target as well. And that's where I just go, you know what? Could these things keep blasting off? They certainly could, but I've hit, a multiple of my risks. So I'm going to scale out. So this one was great. But if you look at this chart, this purple line right here, this is our 10-day exponential moving average. This here is our 5-day exponential moving average. and we're just so extended away from those levels. So it's tough not to be a seller as the stock just gets way far extended. PDD as well. Look at this one, man. This one also just really extended from those key moving averages. So I have been scaling out. I'll show you the one trade that I did put on yesterday. Take a look at this.
You in the minors for this run, Andrew?
No, I'm not, but the miners look fantastic.
Yeah.
Yeah, I heard you speaking about that one earlier. That's another group where it's starting to emerge. The trend looks great. And the trade is really starting to work. I think if you're in that one, that's definitely fantastic.
But you would wait probably for a pullback in those.
Yeah, let's see. Let's take a look at the gold miners.
Well, if you want to cover Qs, we could finish it. I know some people were looking for about 310, 315 after we had that big Sigma event on an inflation number a few weeks ago. It opened the door. I think who was it? It was the guy from Spider Charts.
Trend Spider.
Trend Spider, yeah. Yeah. Charlotte's Web is what.
Yeah. Yeah, those guys are awesome. I love that. That whole team is great.
Yeah. So you show more upside here. We're only at R1 on Qs.
Yeah. So based on what I'm seeing in my analysis, I always like to traffic in the most high octane leadership stocks. Yeah. And a lot of those names are already very extended. So I'll go to a few of those first. Like SMCI, this has definitely been the leadership stock of this rally. Yeah. And this thing has had maybe like a 50% advance. Yeah. This one was pretty extended up until a couple days ago. And we just got this, looks like a retest of almost the 20-day simple moving average. This stock here, Sanoma, this is one I actually have on my watch list for today. This one already had a fantastic run. So if the market is going to move higher, I'm looking for some of these groups that maybe haven't participated as much. And the NASDAQ has just been a huge laggard. Yeah. So the trade that I entered into yesterday, I saw that the market was reacting positively to Jerome Powell. And I was cognizant of the fact that, hey, I already scaled out of a lot of exposure, but I'm not seeing a lot of individual stock setups. So what I did was I took an entry in this ETF. And you see this yellow line right here? Yeah. This right here is the anchored VWAP from when we got this really good CPI report about 2 or 3 weeks ago. So what I did was I entered the Qs at 289. And the Qs had started to break out, and then they retested back to this prior high right here. So I took the entry at 289, and I have my stop out point just below that anchored VWAP from the CPI report. And then right here, this is my R1 pivot. This is where I'll have earned 1 times my risk budget. I have the R2 pivot. This is where I'll have earned 2 times my risk budget. And then if we get just crazy into the end of the year, we'll hit my R3 pivot. But this R2, this is where I'm going to take off 50% of the trade. And then at the R3, I'll probably close it out. Then, of course, if it moves to the downside, I'll take my full stop right here at this 283.8 level.
Okay. You were talking about groups that really haven't participated yet. How about the cannabis sector?
Yeah, let's take a look at that. So let's go over to...
You own any of those? Oh, look, you have a little bud on the bottom of your screen.
Yeah, so let's take a look at the group first. So we'll go to the MSOS ETF. This is my favorite one to just monitor the group.
Right.
Yeah, this MSOS, yeah, it hasn't really participated a whole lot. Right. We just got the pullback to the 20-day simple moving average. This one could definitely be a candidate to look out for. Another group that I am watching pretty closely for today's session is biotech. Okay, check this one out. Yeah, if you look at biotech, this shaded area on my chart, this is the monthly value area. So it's really just some market profile levels. It's showing you where most investors have traded the asset over the past month. We're about to have a brand new monthly value area for December as soon as the market opens today. And biotech is going to be trading just a smidge above that monthly value area high. So if the market just decides to continue to move, maybe it does, maybe it doesn't, you can enter the biotech group with a pretty tight stop loss right below this monthly value area high. So this is definitely a group that I would look at as like a catch-up group. If the market starts to get really speculative and there's a performance chase into the end of the year, I'm going to be looking at this group, and I'll probably just trade the ETF.
Okay. You ever take the short side of the market?
I do, yeah. Our last interview in the late fall, we had gotten a signal from our VVIX risk indicator, and that was actually a pretty fantastic short setup. With that one using our indicator, we pretty much caught the top of the summer rally within, it was about like within 2 days from the top. So it's pretty fantastic.
Yeah.
I'm not getting any short signals now though. So that's the thing. I'm at a spot with my process where I'm pretty wary that the market's getting a little bit extended, but I'm not getting any short signals either. And that's something where, like, as a trader, you never want to just short it because it's gone up a lot. You know, that's like the ultimate, you know, kiss of death.
Amateur.
Yeah. So I'm just trying to, like, if I get a short signal, I'll take it. But for right now, I'm long. I have a lot less exposure than I did prior. And I think it's just, you know, seeing how we do at this trend line.
A lot of people looking at some, do you have some resistance levels or anything above the market? Should we have a continuation here where you might be looking for another level that the market could run into resistance? Or do you think that we have a shot on this breakout for making new all-time highs into early next year?
I don't think so. I don't think we're going to make new all-time highs. And the reason why is because we have this really potent cocktail going on right now where the Fed is raising interest rates.
Right.
And I think the good thing that the market has recognized is that this interest rate hiking cycle is coming to an end. You know, the Fed's going to be done with their hikes in early 2023. So I think the market's gotten out in front of that. But we also have the balance sheet that's continuing to roll off.
Yeah, that's even more restrictive. Can I ask you, Andrew, what does VNOM stand for? And you have R1 at 4278. That's a number I've heard some people bandy about between, like, 43 and 4400. You know, maybe back to the August highs and then a failure. So what is VNOM?
So this Venom R1 pivot, this is an extension away from the monthly value area. So the way that I think about this shaded region here is this is where most investors were transacting in the S&P 500 for the month of November.
I see.
So if you're breaking out above that, that's bullish, right? Because it means most investors that bought in November, they're above water on their purchase. This is really just like an extension level from that point. And what's pretty cool is it actually lines up with the summer high. So that's the next level that I'm looking for. If this rally just decides to go to the next level, and it certainly could, you know, there's a lot of fund managers, they're underwater for the year. Careers are on the line.
Yeah.
I think that's the next level to the upside.
Okay. What a great interview. Whose charts are these?
So this right here, this is Think or Swim.
Oh, okay.
And then I also use TradingView as well.
Okay. And how about a look at your website and the best way for people to, get in touch with you and work with you?
Absolutely, man. So let's take a look at
unless you wanted to wrap it with something else, but I think we have your views here. You're lighting up.
So let's take a look. Feel free, reach out. I'm on Twitter at RealPristineCap. And then we are also at pristinecapital.net. We have an active trading Discord, and you can see all of our real-time entries and exits and all of our research workflow here.
Okay. And you have a 30-day free trial for all those out there that live by the expression, if it's free, it's me.
Absolutely, man. So feel free to take a look at that 30-day trial. That'll get you into our active trading Discord. And take it from there. I think most people, if you give it a shot, you'll really like what we're offering.
So, you know, if stocks are your things, something to consider. I could tell Andrew is a disciplined guy by just the way he talks and about his trade setups, and he says stops. A lot of people come in here, they don't even use that word. So thank you again, my trading warrior brother. Really
Absolutely,
nice
man.
interview.
Best of luck to you into the end of the year.
Yeah, happy holidays to you and yours, and I'm always rooting for you and look forward to having you back.
Thanks so much, Dale. Looking forward to be back.
Andrew O'Connell, everyone, and you can follow him at Pristine Cap, right? Is that correct? At Pristine Capital or Cap?
Absolutely. Follow us at Real Pristine Cap, and our website is pristinecapital.net.
Okay, they're not just, you know, Andrew's not just pristine, he's real pristine. So
Absolutely,
don't go to
man.
any fake pristines out there. And Andrew, good hunting. Thanks very much for sharing your views and edifying the F.A.C.E community today.
Absolutely. You as well, Dale.
All right, buddy. So that's a wrap, everyone. And you could join the team in 25 minutes on the Morning Edge. People are thanking you, Andrew. Well, he's gone. You're welcome, Pavana. See you, Patrick. Remember, don't just count your pips, count your blessings. Good hunting today, guys and gals. Adios. You're welcome, Chapal.